Joining us from London is also Managing Director and Portfolio Manager at Pimco Europe. Michael Amey is responsible for sterling portfolios. Thank you so much for joining us. In terms of what you're expecting from the Chancellor today, Mike, how important is it that he actually gives the markets the confidence that they need? If he says he's going to increase the budget deficit, then it will, of course, I imagine, hurt gilts.
I think it depends on why he says he's increasing the budget deficit. I think if he says he's increasing the budget deficit because he wants to reverse the spending plans, I think the gilt market would take that very badly. I think if he says the budget deficit is going up because the spending plans are the spending plans and will remain the same, and revenues are coming in weaker, and it will take longer to work the deficit down, then I think the market will give him the benefit of the doubt.
So does it mean that actually what you're telling your investors to do at the moment is just stay put until we exactly hear what the Chancellor will lay out this afternoon?
Well, we think that, you can't just look at the gilt market from what the Chancellor is doing. You've got to look at the gilt market from what the Chancellor is doing and what the Bank of England is doing. And at the moment we have this arrangement whereby the Chancellor is pursuing the fiscal austerity, and the Bank is doing everything it can to support that programme. So as long as that tight fiscal, loose monetary framework stays in place, the Bank continues to buy gilts, then gilts should be pretty well supported.
Michael, I also want to bring in David Tweed, our Europe editor, into the conversation.
Yeah, well, Mike, I'm just curious on your view, because, I mean, you're talking about how the gilt market has been reacting quite well to the austerity measures that have been put in place by the Chancellor. But, when you look at other places where you see haven purchases going on, I'm talking about the United States, I'm talking about Japan, you don't actually see either of these two countries as being the paragons of fiscal austerity. How much do you account for the fact that, the gilt market has been seen as a haven simply because we're not in the Eurozone?
Well, there is an element of that. I think there are two elements that we have. One is that we are, we're not in the Eurozone, and the second is that we have our own currency and we have a relatively clear framework. I think, if you look at places like the US has the reserve currency, Japan has massive domestic savings. So each of us has our own advantages. But I think for now, we are pretty much one of the cleaner, dirty shirts. Is probably the easy way to put it. Yeah.
Is there a danger that actually the best of the gilt is now is now past it, or will the Bank of England continue supporting gilts in the future?
I think they will. I think they've indicated that pretty strongly. I think if you look at what they've been saying recently, they've indicated they expect inflation to undershoot the target. They would ultimately therefore expect QE to continue through next year. So I think, for now, the gilt market will be supported by what the bank does as much as what the Treasury does.
Mike, we just heard from Mervyn King there from the Bank of England saying that the government needs to prepare some contingency plans just for if the whole situation in Europe does significantly worsen. What would you be expecting the government to do in terms of contingency?
Well, I think we got the first hint of that over the weekend, to be honest with you. We've got this indication that the government-guaranteed bank lending programme is going to be restarted. Don't forget that was one of the key planks in 2008, 2009 when liquidity dried up for the banking sector. The banks issued a couple of $100 billion worth of government-guaranteed bonds. So we've started to get some indications that some of the contingency plans are already being laid out there, actually. And those are the kind of things I think we should expect to see more of.
And if these contingency plans actually don't come to fruition, is that when the haven status of gilts will actually run its course?
I think if the contingency plans don't come into play and there is no response to a very poor European outcome, then sterling would come under pressure. Yeah, I think that would be the world in which the UK would be very vulnerable.
And so do you have a kind of range where you're expecting gilts to trade? How are they going to perform compared, for example, to German bunds?
So I think gilts can perform pretty well relative to bunds. I mean, the 10-year spread is basically flat. 30 years still trade above bunds. I personally wouldn't be that surprised to see the 30-year gilt outperform bunds from here. I think the 10-year is a bit of a trickier one, but I think the long end of the gilt market looks pretty well supported, and that's where the Bank of England is buying. So I think that's probably where the best performance will be.
Mike, can we just turn to US Treasury? We saw that Fitch has now got a negative watch on for the credit rating. Do you expect to see much reaction from the Treasury market as it opens today?
Well, I don't think we'll see a similar reaction to the last time one of the rating agencies, put action on the US. To be honest with you, I don't think it will have a big impact. I think the markets look for countries that have their own currency, that have reasonably hard currencies, and use those as the preferred, safe havens at the moment, and that remains the case post the Fitch statement.
And so, Mike, just to make absolutely sure, it was UK gilts were actually the best performers year to date. Do you think they'll continue being the best performers amongst treasuries, amongst German bonds over the next 12 months?
I think they will, because I think the Bank of England has got the clearest support for any of the major government bond markets. Yeah.
All right, Michael, Amey, thank you so much for joining us. That was great to have you on the programme. Portfolio manager there at Pimco Europe.